Hello, Maverick traders. Welcome out to your market roundup for May 24th, 2022. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan. As has been the case in 2022, a lot of volatility. And if you are a company and you say anything negative, if you miss, if anything goes wrong, you are going to pay the price. And today, that was Snapchat. So Snapchat came out about a month ago. They had earnings and they guided and they said, here's what we see and so on. And about a month later, they came out with a big pre announcement and said, we're going to miss on all these numbers. The world has changed, and people freaked out this morning, especially at those that sell ads. So, Snapchat, Facebook, Google, anyone that sells ads got absolutely hammered. And they said, well, if it's bad for Snapchat, it's probably bad for everyone else. And what do we make of that? Well, it's interesting. There's been some huge downturns in stocks over the last week or two. Target, Walmart, I mean, these are huge corporations just falling dramatically, 20+% in a single day. You're talking about tens of billions of dollars of market cap wiped out, and yet the stock market's flat for the past couple of weeks. I mean, look at the chart. We've gone sideways here. So it kind of speaks to that we've got exhausted on the downside. Now we're not going up because these debacles keep happening, but we're not going down anymore either. We're just, we kind of bounce and then we sell off again on some terrible news. And yesterday we bounced and we sell off again this morning on the Snap news. Now, today was a little bit interesting in that it was a bad day with really good price action, really bad news. You still had more advancers to decliners with about every 2 out of 3 stocks going down. Most stocks are below their 50-day moving average. We're in this downward trend, but we might be spring loaded towards an upward move. And when in on earth do you see a day where the S&P, the NASDAQ was down almost 2%, small cap down about 1.5%, and you say it was actually positive and pretty darn good price action? Well, today was the day. We came off of the lows, leaving this long lower shadow, and you can see there's just buyers down here. Look, we wicked down and they bid it back up. We wicked down and they bought it back up. We wicked down. Now, it's certainly possible that this level could break at any point in time and probably will break in the not too distant future. But I think we have a little bit more upside to follow. This will be pretty disappointing price action if it doesn't have some real follow through. But I would say, give one to the buyers, give one to the bulls here, because with all the news, if you had told me that Target was going to do this, Walmart was going to do this, Snapchat was going to do this, Google was going to be down this much, Facebook was going to be imploding, and the market's flat during that period of time, I'd have said no way. Can't be true. And here we are. Look at the Nasdaq again. Really bad news. Now we're at the lows. I mean, I guess maybe I'm too glasses half full type of outlook, but I don't know. I think this was kind of the exhaustion low, and since then we're kind of digesting that and trying to get some follow through. Now, if the dominoes keep falling, if there's more bad news tomorrow, I mean, this might just be a market that just can't go up. Maybe there's just going to be another shoe to drop tomorrow. I mean, Snapchat doesn't come out with that news if it's not a tough environment. So we've got all these headwinds. You've got the economy, you've got the Fed raising rates, you've got inflation numbers out of control. The market's not going up, but I'm pretty impressed that it's not really going down in dramatic fashion. The tech complex is really suffering. That's been the case, and certainly today. But there's a lot of green on here. Healthcare was nicely higher. Consumer defensives, real estate, energy still more in the green. Utilities in the green. So, most of financials over here were more in the green. There were some pockets that anything that was more, tech slash financial, a little bit more of the tech and consumer type of financial, anything consumer related, technology related, those are the pockets that suffered. And that's right in what Snapchat talked about, that basically we're going to cut down ad spending The technology and the consumer side of selling ads a little bit challenged in this environment. So our market outlook coming into this week was 0, which so far is pretty good. If I have to give it a rating for the rest of the week, I mean, I can't be that optimistic, but at least expect some rally, some bounce in the markets given the fact that we were able to come off the lows today and really battle it out to a certain extent. So pretty good price action in down market. So let's take a look at a few different ideas. Last week, I said it was pretty hard to find bulls. This week, I'm going to flip that and say it's a little bit more difficult to maybe find bears. Um, on the bull side, last week we had Electronic Arts highlighted, and I would say at this point, the news that's circulating is that they're potentially going to be bought out, and they're in active discussions, maybe with Comcast and others. We highlighted this as a bullish trade last week, and it's up nicely. I don't know. That's a risky proposition. If no deal is struck, the stock is going to be dramatically lower. If it is, you'll probably get a little bit more pop to the upside. So you've certainly got to look at your position and kind of say, where am I at in that? How much risk? How much reward? If I'm in a spread that has made a nice big profit and there's not as much profit left in it, I would certainly be inclined to take profits in that trade because most of the time when you're going up, there's not huge downside risk because you can see the influx of buying and you can see that it's stable. But this is a different circumstance. This is all going to hinge on whether or not they're going to be bought out by one of these other big corporations. And the odds of that are less than 50%. So I don't like the risk to reward of that. You might see a big old drop. So I wanted to talk about that just to kind of talk about the circumstances around it since we highlighted it as a bullish trade. And look, it's gone higher. You might have to take profits in it though, because it has a lot of downside risk if the buyout doesn't happen. Gilead in the biotech space. So as I look at this chart, what I'd really love to see is a little pullback, kind of a minor dip, but a little pullback back in here. Call it, 62.50, 63-ish. Just pull back a little bit, give us a little handle type of formation before the upward burst. I think it will kind of, have the ups and downs, so I'd look to buy that on a pullback. Sometimes those pullbacks tell you a wealth of information. Imagine this thing just collapses to the downside, huge red candle or something. Well, then we don't have a position. If it just pulls back for a day or two kind of into that zone, though, I think this is one that I would be looking to buy on the next dip. Last week, we talked about a couple of these bullish trades. If they pull back, look at them. Well, some of them broke heavily to the downside. And, in other cases, you might have been able to buy the dip a little bit. So that's that circumstance where I think I would look to buy it on the dip. WDC, I think what's happening here is kind of a corrective phase, and you could see a little pullback here towards 54, but I don't even mind on this one maybe buying in sooner than that. I suspect this is a little kind of flag or wedge pattern that we're probably going up and out from here. And I really like this one in the context of it's in an uptrend in a tough market, in a tough environment for tech, and it's holding in pretty well. It's consolidated the past few weeks, but I think the next leg of this should be to the upside. On the bearish side, Pepsi is rallying up and probably has another day or so, but if you come underneath these moving averages, you should see a bearish cross start to happen here in the next day or two, and I'm going to be watching this coming up underneath. Last week, we highlighted two charts very similar to this in ADM and Mosaic, and they both broke down. Really, if you are short Archer Daniels Midland or Mosaic, they immediately kind of went to the downside after the setup. Pepsi's not there yet. It didn't have the perfect kind of actionable setup. That's why I said last week bears were ready and bulls weren't quite ready. Well, this week I think bulls are maybe a little bit closer to ready. And bears, I've got to wait a little bit on this. But Pepsi, if it gives you the right setup there in the next day or two, could be interesting. LNG, this is in the energy space, which has been such a great sector, but it looks kind of like, well, it's clearly lagging. And if you took a bouncing ball and you just bounced it on the table, it's kind of bouncing and looks like it's about to fall off the end of that table to the downside. Really bad price action as compared to its sector, to the market in general. It's kind of uh, weak just in the past few, well, call it the last couple of weeks, um, as compared to the sector in the market is still pretty bad. And I wouldn't mind adding a bearish trade in energy simply because I've had quite a few bullish trades. Now I did take profits on half of my Occidental Petroleum position, so I don't have as much upside risk, but nevertheless, I think this one could be interesting as a downside trade. And then last but not least, Unilever. Think what's kind of happening here is just, well, first of all, it's choppy. It's an international stock, but we kind of broke down and we're getting a bounce. But I still think the path of least resistance is going to be to the downside. And it's kind of like Pepsi, where it's not quite ready. But if it gives me a setup right there at the moving average within the next day or two, I would expect it to pivot over and have another test to the downside. It's going to be a slower mover. This and Pepsi are not super high flyers. They're kind of consumer staple type of stocks. They're not, high beta, but I think it'll be working its way a few points lower. So you could look at diagonal put spreads, calendar put spreads, maybe even verticals, something that just kind of targets a slower melt to the downside. Inflation, I feel like, is kind of peaked, and we're starting to see the data as such. So some of the groups that looked interesting for shorts last week have started to work. Agriculture, soft commodities, mosaics of the world, those things are starting to roll over. We've got some other ideas this week for potential trades as well. On the economic reports, you've got FOMC minutes tomorrow, preliminary GDP here in the US on Thursday, and then earnings. I mean, there are some volatile names here. Alibaba, Nvidia, Snowflake, and Costco's not historically very volatile, but given the debacles of Target and Walmart, you got to go into that one with some trepidation. It's traded down in sympathy to those other names and how poorly they traded. Costco would normally be the lowest volatility out of all of those, but you just never know in this market. If any of those companies say anything that's just not quite right and not quite hitting the mark, they're going to be punished. We actually had Snowflake in the bearish list last week, and it's been hammered. It's going down. I would be inclined to maybe consider taking profits on half of the trade, something like that, because earnings are make or break. And I would still expect, the market knows something, and they're more likely to go down than up, but I would have a little bit of caution and be careful with that. But if you did get short, it was one of our highlights last week. That trade should be working well. Just be aware it reports earnings tomorrow after the close. Hope you've enjoyed the market roundup this week. Have a great rest of your week, and we will see you next time. Goodbye, everyone.